Hello and welcome to Investors Platform. Today, I'm here with my mortgage broker, Matt from Mercian FS, and we're going to break down credit scores, reports, and how to get yourself in the best possible position to obtain a mortgage. So the first question I want to ask you today, Matt, is what actually is a credit score?
So it's information recorded. It's shared between credit providers, mortgage companies, credit cards, loans, etc. So each time you have a piece of credit, mobile phone, it's recorded on this register, and that is shared between other credit providers, so they can see what you've been up to and your general conduct.
Yeah. So why is a credit score is important for lenders and yourself as an investor or someone looking to buy a property?
It's important because it's going to determine which lender is going to lend, because each lender has their own appetite for certain properties, whether it's standard, non-standard construction, high-rise flats, steel framed, timber framed. Income is a big one with how lenders look, but what they universally share is credit. So if you've not had a good credit conduct over the last few years, such as missed late payments, county court judgments, defaults, arrears, both mortgage, what they call secured arrears and unsecured on a personal loan. That's what they look for.
So what sort of common issues do you see on credit reports, and is there any easy fixes?
Absolutely. All boils down to, where we touched on the last one, is speaking to a broker as early as possible, because you can look at it and maybe not be able to sort of decipher it, because we deal with them day in, day out. So common issues that we see is multiple addresses. So we've not updated bank statements from when we're at uni. We're down driving license at parents' address and we're living in another rented address. That's probably one of the biggest ones that we see. Another common one is we've moved out of a house, shared house, rented property, and not paid off a small amount of gas, internet, phone, something like that. And the lender is sending letters to that address because we've not updated it. They don't get a response, they don't get payment. They put a default, or even worse, a county court judgment on your account for 20 quid. I've seen them for £20. Mobile phones are a common one as well, although we tend to see credit things like Sky and mobile always up to date. That's what people need. And then like the stuff like gas and gas, well, it's only 20 quid, we won't pay it. They won't, they're not going to do anything for 20 quid. They will.
20 quid, yeah. And say, for example, you get like a CCJ or any, issue on your account. How long will it take you then to rectify that and to get that clear from your credit score?
That's a good question. Well, it's on there for 6 years from registration. So with the county court judgment, what they will do is they will try and get that money, not get it, put it on as a county court judgment. So that's going to stick with you technically forever until it's paid. But even if you got it on the 1st of January, settled it on the 2nd of January, that is on there and searchable for 6 years by lenders. Now, what they tend to do is look in the first 3 months for issues, 6 months, 12 months, 3 years, 6 years. So knowing where that, we will get a copy of the credit file from the client. We have a system that allows us to be able to look into some details. Is we can then say, oh, we've got a county court judgment registered last July, so it's a year old. We can get rid of all of these lenders. They won't do it. But then the lenders that we are looking at, they're not going to be able to do your residential with a 5% deposit because it's too risky. They're not going to do that buy to let with a 20% deposit because it's too risky for them. It's outside of their appetite.
So what you're saying is there's still lenders out there, but it just narrows down the search massively.
Very much, very, very much. And how risky it is to them. And with risk, up goes the interest rate.
And so if someone has a very poor credit score, Can they still buy a property, or what is the minimum credit search or credit score?
I mean, that is a bit of it's a strange one because different credit reference agencies have a different maximum score. Like Experian, probably the one everyone knows, is 999. And other ones like Credit Karma is, I think, out of 700 or something. So the first thing you really need to do is get a copy of your credit file. There is one we use that looks at Experian, Equifax, and TransUnion in one easy to read format. So at a glance, we can see what is happening. Now, good ways to then look at building your credit. People think, oh, I don't have any credit. Well, if we've got a mobile phone, there's a piece of credit. If we are registered to vote at the address we live in, that is down there to bulk our credit score up. Driving license is a very common one where people don't update it. Now, it makes our life hard work. It makes the solicitor's job hard work because they want a proof of ID, photo, and address. If you get stopped by the police and it's at the wrong address, you can get in trouble. So those three things, the mobile phone, registering to vote, and updating your driving license is really going to do wonders for your credit score, even if you don't have a loan or a credit card. I speak to a lot of people who go, oh, I got a credit card because I was told it was going to improve my credit score. I'm like, oh no, who's told you that? The internet's
Yeah,
told.
that's common advice.
Yeah,
That's definitely common advice. I've been told that as well.
absolutely. It's like the expert in the pub. Now, yeah, it can improve it. But what happens with a credit card is you get your first one, they give you a £500 limit. We'll go and put fuel on it once a month. Oh, we'll go and buy some clothes. And then the credit card company see your activity and they'll go, we'll give you a limit now of 2 grand. And then they'll increase it and increase it and keep increasing it without you even realizing what they're doing. Now, that's dangerous in two ways. Firstly, is if we have a 10 grand limit and we spend £9,500 on it, we are near the limit of that card. We're heavily indebted. We're going to struggle to get any borrowing. But the way lenders look at it, if you've got a zero balance and a 10 grand limit, they will go, well, that person can go and spend 10 grand today on a credit card and impact affordability. So getting the credit card to improve credit score isn't the golden rule, I would say. It's making sure all of your addresses match and everything is up to date. We've not got that small outstanding utility bill at an old address.
Yeah. Going back to the original question of if someone has a very poor credit score, I know we've mentioned that, yes, but only very few lenders. Is there anything else that they can do in terms of joint venturing with someone else that has better credit score, or is it just that they need to improve the credit score? What options do they have? Are there any solutions for people that have poor credit score?
If you have one applicant with a terrible credit score and one with an excellent credit score, the lender will base it on the worst case scenario and it's going to impact it. The ways around it is a bigger deposit, because as I mentioned, if you've got adverse credits and missed late payments, arrears, county court judgments, the lender is not going to give you your residential house with a 5% deposit because it's too risky for them. They think they are going to have to repossess the house down the line.
Yeah, obviously these people will have to speak to yourself, but what sort of deposit do you think it would be in terms of like buying a residential property? What sort of loan to value mortgage would they be looking to get with a bad tech or with a very poor credit score? Let's say 500 out of 1,000.
Yeah, if you've got those blips on your credit file, you're going to need a 15% deposit to buy a residential house.
What about buy to let?
Buy to let, there are lenders that will do it with your like traditional 25% deposit, so a quarter of the property price. But because they are taking more of a risk, we're going to be looking at higher interest rates and less option.
Good advice that is. So you've gone through it just previously, but how would you say that you can improve your credit score? Other
Very
than,
much.
other than the method that you just spoke about there, is there any other ways that you can improve your credit score?
Direct debits. Set them up on your credit card, if you have one, to be the minimum payment to go out at the same time every month on the first of the month, or after when we get paid. That is probably one of the biggest ones, because credit card companies don't do it by default. And then something happens and you forget to pay it, and then it's down as a late payment. So setting it up on a direct debit to take the minimum payment, you can then make overpayments in between your normal committed monthly payment. And that is really about it. It looks really complicated when you look at a credit file. Another one that is, it can be down as associations. So if you were in a relationship or something with somebody and they haven't changed their address, they could be down as a financial association with you. So when a lender searches, they're going to find this ex-partner from 2-3 years ago, and they're going to go, "Oh, they're too risky to lend to." Multiple credit searches are not good as well. So you might not realize every time you do an insurance quote for home, vehicle, it puts a footprint on your credit file. Now, if you then start applying for credit cards, personal loans, every time it searches, it's going to put this footprint on your credit file. Now, when a lender looks, they're going to see all these footprints and think, is this person getting declined by multiple people before? We don't want to entertain it, decline.
It seems a bit unfair to me for that one, because surely that's just you seeing if you'll be eligible for that loan. So you're not actually going. It's not like you're taking out the money. So what is the reason behind that?
They want to know who you are. They want to know if we're going to insure your car or insure your home or give you a credit card or a loan. We're going to search your credit file.
Yeah.
See if you're eligible, to see if you're a good risk. Have you been paying your bills?
But is there any other ways of getting feelers out to see if you are eligible for the loans before you do a hard search? Because without that knowledge, how do you know if you're going to get the mortgage, for example? How do you know you're going to be able to go for that deal?
Sure. I mean, most mortgage lenders now, with the exception of a few, are a soft search at decision in principle. Now, if you try and do it yourself and you go to all these different lenders, is you could put multiple searches with mortgage lenders on your file, even worse, hard searches. Now, before we even get to doing a decision in principle, so where we put the information into a lender system and press send, is we do the eligibility check. So we look at the lender's criteria. Does their income match what they're looking for? Is it from overseas? Is the property of standard construction or non-standard construction? Does it then fit their affordability model, which we have multiple calculators that we use? Then when we are certain that that is going to fit with that lender, we then do a credit score with that lender. Now, that could be a soft search, but when it goes through to full application, so we've got the decision back, it's a pass, the DIP, the AIP, MIP, mortgage in principle, decision in principle, agreement in principle, they need to standardize it. When it goes through to full application, then the lender will do their hard search on that. So when we're at that point, we need to be certain as brokers and with the client that that is going to go through with that lender. Otherwise, we unnecessarily put a hard search on there. So it's a lot of
It's strategic, isn't it? It's strategic, I think, from what you said.
Absolutely. Is, like I say, we do all those steps before we get to submitting that, to putting it through to the lender itself. You also need to check that it's not fraud. So you've not just picked up a lead online, you put the details in, you get a pass, you then get, everything you need, full application and submit. If you've not done your due diligence as a broker, you've then actively supported that criminal in trying to commit fraud. We're then as guilty, if not more guilty.
So an excellent credit score, what does it actually look like on paper then? Because I know we've talked about it, but if you're able just to summarize it, just points that you need for an excellent credit score.
Well, 6 years clean credit history, no mispayments, one address showing up on the system with each provider. No cards near their limit, and no cards with massive limits. Registered to vote. And even we do see people who are registered to vote, they get everything through from the local authority, but it's not actually down on the credit system as they are registered to vote at that address. It's not been updated. It's relying on somebody else doing it. So those things really is keeping everything up to date, driving license, registered to vote, all at one address.
Cool, love it. Right, so let's move on to what the lenders look for in an applicant then. So when you refer someone to get a mortgage for lending, what do they actually look for? What due diligence do they take on the person?
That's a good question. I mean, they're relying on us mostly as the broker to do all of those first steps of due diligence, to check the deposit's not from a fraudulent source. The person applying is the person who's sat in front of us or on Zoom or on the phone. They're the key things. But what the lender is looking for is initially, they're never going to speak to the client. We're the intermediary, the intermediate between the broker and the client and the lender. So we're the go-between. Now, we're going to tell that computer system a set of information, name, address, date of birth, income, expenditure, and it's going to go through. It will either pass, refer, or decline. Now, their internal credit scoring is going to be doing all the work behind the scenes. So it's going to look at these credit agencies, Equifax, Experian, TransUnion, and if it finds one address, good. It knows who that person is that's trying to apply. If it finds driving license in London at parent's address, bank statements going to Cardiff for university address, and rented address it's finding mobile phone in Edinburgh where they live now for work, it's going to go, who is this person? It's possibly fraud, decline. Also, multiple addresses. So somebody has moved a lot. They might have updated it a lot. Everything, driving license marries up with bank statements, with mobile phone. But if they've had 5 addresses in the last year, lender doesn't like that. I'm not going to say it's going to decline, but they're wondering why is that person moved so much in a short space of time. Also, job changes. The old rule is you need 3 months worth of bank statements, 12 months worth of history. We can get you a mortgage, even if you're starting on the 1st of September, say, as a teacher, and you've never worked before, we can get your mortgage today. But if you've changed jobs 5 times in the last year, the lender's thinking, is this person employable? Are they going to get sacked when they get the mortgage, and they're going to lose the job, and they're going to default on the mortgage, and we're going to have to repossess it? So that's all done in a second or so with most lenders. Some of them can take a day, but in essence, your big banks, Halifax, Santander, NatWest, we press send on that decision in principle. It's going to give you a decision, bang, straight away. Their systems are so powerful, it's going to do all that hunting and go, that fits our criteria. We like that. Not the end of it. It then still needs to be underwritten, go through bank statements. I'll tell you something they have introduced as well. It's slightly off topic, but within the credit score thing is, if we tell that system you earn 50 grand and you bank with Halifax, and we're doing a decision in principle with NatWest, is NatWest can look at Halifax's bank statements and vice versa. They'll work out what the net pay of 50 grand is a month. Is that going into their bank account? Yeah. So that's a very powerful system.
Quite scary, really, isn't it?
It is. It is. It is. I mean, it's
But it
designed.
will clamp down a lot of like money laundering sort of things, won't it? But
Absolutely. And it also reduces the time we have to get 3 months bank statements, 3 months pay slips. The lender, when we do the decision in principle, might say we only want one pay slip because it's found enough information. It's found your ID, it's found your income, it's found your conduct. We ask for everything because we have to get it from our compliance. But the lender then can go, actually, we want 3 months bank statements, 3 months pay slip, certified driving license, we want a proof of address. They want everything. So if we've got it, we can just send it in. It can be a bit to and fro with documents, but their computer system is going to try and do as much of the work as possible to reduce the human interaction, which is a good and a bad thing, because there's no reasoning with a computer. It's like the Terminator. Doesn't have any emotion. So if that person wants the dream house or they need to move out and it doesn't pass the lender's credit score, they're like, tough.
right, so you said it's a system that just rejects it straight away. But if you go, right, fair enough, then go back, have a look at your credit score, go, oh shit, I didn't change my address and I need to change my address. I'm now changed my address. Can you then reapply to that same lender? Or do they kind of say, no, you're not allowed in, we've already rejected you?
I guess a very good question. Yes and no. Is they may give you then a time frame with which to be able to reapply. But also, we have to check the human element side of it. So has the address been put in right? Has the date of birth been put in right? Do they go by their middle name and they've got a first name that they've not given you? Because when you ask him, oh, my name's Dave, but his name is Alexander Dave, he doesn't like being called Alexander. So you have to check the human input. You have to be really, really careful when doing that. But yeah, that's a very good question. Like I say, yes and no, bit of a politician's answer, I'm afraid, Joe.
Yeah. But I was wondering as well, as if can someone go in the actual file and manually approve it or reject it or not? Or does it always go through this spawn system?
Absolutely. If it refers, so we think of it a traffic light. So you get your green, accept. That fits us, send us the documents we've asked for, give us the property address they're buying, go.
Yeah.
Red is decline, we don't want it.
Oh, so that's straight up decline. So there's nothing you can do about it. So it's declined straight away within a second. Like find someone else not interested, basically.
Unbelievable. And then we've got amber. Now that's the refer. So again, it might be finding too many addresses. Enough for the lender, but maybe too many. It might be finding there's an anomaly in the name. So you could have gone for a bank account and it's used your middle name. Could have gone for a credit card and you've spelt, someone spelt your name right when they were keying it in. They've spelt like Graham and Graham. Someone will just write it down HAM, but it's EME. So it's finding these little anomalies. It's saying the credit's all right, it more or less fits our appetite, but we need more information. Now, some lenders are really good, is they will go into that DIP, decision in principle, and have a look at it, a human, and it will say, why is it referred? And they'll send you an email to say, Matt, we just want the proof of address from last year. Pass it through. That makes sense. Go.
What's their viewpoint on for people that have multiple bank accounts, multiple credit card accounts?
It starts raising questions with them. Why? Why have we got lots of bank accounts? Because they're going to ask for one set of bank statements where your bills are paid and your salary is paid. Now, if it sees transactions that we have to find first to another account, the lender is going to think, worst case scenario, out of that other account, we're paying £1,000 maintenance, we're gambling on that account. All of these, like I say, they think worst case scenario upwards. It's good to operate a bills account and a spends account. If you get paid into one account and you use that card in the pub and at the petrol station, and someone clones your card or steals your info, they can empty your bank account where you pay your mortgage. Multiple credit cards, quite common. People do balance transfer, and then they've got 5 0 balance but £1,000 limit credit cards in the background that they've not used for years. Get rid of them, close them down, and then the lender isn't going to find them, because then they don't say, oh, you can go and spend all that money on a Armani suit and some a fancy holiday. But that's a good thing. We have to think what the lender is going to see behind the scenes, both the initial assessment.
Would you advise to keep it simple then?
Oh yes, absolutely.
So basically just have the one bank account, or say 2 bank accounts for the savings, and then just keep one address, and then just keep it as simple as possible. Is that what advice you'd give to people?
Absolutely, that, mate. I can speak to first-time buyers or people who are thinking of moving next year. I'll say, right, let's have a look at your credit file today. I'll go through and go, right, get rid of that. You've not used that. Close that down. Reduce that limit down to £1,000. Keep your emergency credit card for when the car goes bang or the dog needs the vet, and we've not got the money available. But get rid of all these unused items on our account. Just tidy everything up. Really
good advice, that, mate. So some lenders credit search rather than credit score. I know we've been over this bit briefly. Are you able to add any more on that at all?
Absolutely. So your big high street banks who want to do the volume, they don't want to speak to us or the client if they can help it, they are going to credit score. So if it fits their internal score, we've kept up to date with everything, it's not found multiple addresses, we're not near the limit, no major job changes, no major address changes, it's going to pass their internal score, green light. Now, the smaller lenders, the independent ones, the private ones that we use a lot of that you would not have heard of on the high street, but we use day in, day out, they will say, right, get us a copy of the credit file, get us 3 months bank statements, 3 months wage slips, and let's have a look. Because you might have come out of a marital breakup 2 years ago, and you've been really firefighting to keep your head above water, but you're doing all right. We're up to date, but there's blips a while ago. You'd fail with Halifax, not just picking on them, that's just a big bank everyone's heard of, but this independent bank, you're going to get Sharon in underwriting who's going to get the credit file and go, well, actually, do you know what?
Yeah,
this looks all right. It makes sense. Now, when I first started this 22 years ago, I think we're on now, 2 ducks, that's how it were done. It was with a good old, right by my desk, good old calculator, pen, and picking up the landline to Sharon in underwriting and go, hey, up, duck, this is what we've got. What do you think? Yeah, it makes sense. Now, the golden rule we were taught then, and I still apply it, would you lend it if it was your money? If you wouldn't, don't pick up the phone to me, because you know it doesn't make sense. It's like, well, the reason for those credit blips is the marriage broke down. And one was renting, one was living in the house, they were trying to pay the bills, and cards were not getting paid, and because there was bigger priorities. It's got to make sense. If it was like, oh, I went traveling for a year and just couldn't be bothered, the lender's like, well, I'm not going to do that, so why are you putting it across our desk? So that's the difference. Credit score, that's the lender's internal credit score, what they're going to look for. Credit search is going to be a manual, have a look through everything and have a look at what's the loan to value, how long have they been in the job, what's the property like, is it worth it?
Cool. Yeah. So credit profiling of lenders. So it's not directly related to credit scores. Can you add a bit more on that as well?
Yeah, very much. So again, touched on it briefly. It's about their appetite for what they want to lend to. So your big banks, they want to do the volume, they want the quick and easy deals. So employed, few jobs, few address changes, good deposit, not much bonus over time. That's what we want. Then you get the lenders that are like, we're good with overtime commission. You might have a car salesman who's on, he's changed now, but say 12 grand a year, but he'd earn 100 grand a year.
Yeah. Right. So
That's going to be
it's
more
all on
risk,
commission sort of thing. Yeah.
very much, but it might be 10 grand 1 month in April and September when the registration changes, and then 100 quid and 5 grand and 2 grand, 10 grand. It could be like that. So it's knowing again which lenders are going to be good with that kind of stuff, because their system is going to look on the last 3 months and go, oh, they've only earned 6 grand, and you're telling me they earn 100 grand. There's an anomaly there. So it's that's what is going on behind the scenes, and knowing for us where to prod that application.
Yeah.
They're going to go, yeah, that's one for us. Some lenders use 100% bonus overtime commission if it's on the last 3 months. Some will look at 6 months. Some will take an average of the last 2 years P60s to give a better idea. And as long as the year to date stacks up, that's another thing on your wage slips, is you have your income coming in one side, plus your bonus, commission, overtime, whatever. Then you have deductions, tax, pension, student loan, but it'll have a year to date and a week or a month number, depending how you paid. So what we do, a bit of insider information, they're on 100 grand a year. We're on the May, June, July, 4th month. So we'll look at the year to date, divide it by the month number, and then times it by 12. And then have a look. Are they tracking for what they told us? Does that make sense to the last P60? Because if it doesn't to us, the lender's going to get it and go, that's not what they earn.
Got you. So if they work, for example, in seasonal work, they only get work in Christmas, or you know what I mean, they're in the events business and festivals only in the summer or something like that. That's what they're going to be looking for. You need consistent income, basically, is what you're trying to say for most lenders.
Keeping hold of your P60s is gold. I think that's going to be the next one that lenders are going to be able to look at, because who keeps them? You get it in April, you're like, cool, shred, draw, leave it at work, lose it. Lenders need to be able to check that. That would be great if they could go, yeah, that's tidy.
Yeah.
Another good one is, which I did when I was at the first bank I worked for, was ice cream sellers. Now this person was absolutely minted, but it was very seasonal. They did like all of the work May till August, say.
Yeah.
And then the rest of the year, they earned next to nothing, but they're on holiday and they were like working on the business and having time off. So it's again, some lenders will go, not for us. Some lenders will go, we love that. That's what we deal with. They're our appetite. So that credit profiling isn't just what's in your credit file. It's the whole shebang of how your income's made up, job changes, future job starts.
Yeah. Cool. Yeah. So you talk about it a lot about being strategic with your mortgage applications, right? So we've done it before where I've got a second charge, and then that's put me in a position to get a buy-to-let mortgage, or we're now looking at bridging loans to then renovate the property to then put it on a buy-to-let mortgage.
Yeah.
Is there any lenders out there that are out there for helping you build your credit to allow you to go then onto a different buy-to-let mortgage with a lower interest rate, for example?
Yeah, absolutely. So there is what we call them subprime lenders, and that's how they pitch themselves. So you've got your prime lenders, your high street banks that want to lend to people with good credit history. And then the subprime people will say, well, we'll take a risk on that person who has maybe had a property repossessed 2 years ago because the marriage broke up or whatever, county court judgments, defaults, as long as everything else stacks up. So the affordability is there. The properties are appetite, but because of their past credit conduct, we are going to charge them a higher interest rate. Now, quite often when we come back with these options, because it's the only one available to that client, they'll go, I'm like, well, that's not forever. Plan A, we've got all these things going on. I've told you as well. I says you've got plan A, buy the house, either to live in or to rent out. Then I will work with you throughout that mortgage term to achieve the absolute dream. So if we end up paying 2% higher on a mortgage because of our past conduct, we'll have a review every year. Let's have a look at your credit file. Actually, we could now move you to a prime lender, to a high street bank.
Yeah.
Bring that interest rate down and the term.
Yeah. So I just wanted to talk a bit about my experience, and hopefully it brings some good value to someone with a residential property, because we've actually worked very strategically to get a buy-to-let property on the back of buying a residential property. Right, bought the property with a normal residential mortgage. Yeah, added value to the property, so you know where the value add is. Got a second charge mortgage with a different lender, but the interest rate was a lot higher. We then did that for 2 years, I think it was.
Something like that. Yeah, that was your deposit.
So had two different mortgages, right? And then what we could do is refinance 2 years down the line onto one mortgage product. So you've got one mortgage product, one mortgage product onto one sort of thing.
Yeah.
That's doable, isn't it?
Oh, absolutely. It's what I like about you when we first spoke. I said you're in it. You're the long game. It's not like, right, I want to get rich quick today. Is I know where I want to be and what we need to do to get, and what we need to know how we're going to get there, what options are available. That's the good thing, is we have all these systems that search criteria and affordability and all that kind of stuff. It'll never be a pen and a piece of paper and writing down what we want to achieve and then looking at it and going, I know what we can do. Let's do that. Let's do that. So the mortgage really should change around the client, not the other way around.
Yeah. But just to go back on what I said, saying you need to have the right deal, don't you? You know, you need to have the right deal to be able to get two mortgages on them. If you've got that higher interest second mortgage or second charge and you can't refinance out of it, then that's a big debt, isn't it, on your shoulders? That's just taking out a personal loan, isn't it? It's worth mentioning that.
Absolutely. Is before we enter anything that isn't your prime first charge mortgages. So in your instance, we had the residential property with a residential mortgage on. Then we're going to put this second charge on that residential house, a second mortgage, to put down as a deposit on a buy-to-let. Now I have to think in this game, snooker or chess, whichever people prefer, several moves down that table or board, because we need to know the exit plan. If we haven't got an exit plan or it doesn't make sense, I won't do it. So with yours, it made sense perfectly, absolutely perfectly. We refinance it down the line, put it all on one mortgage, the deposit's down on that, buy-to-let, happy days.
Yeah, just yeah. Well, you'll go through with someone who's looking to do the same. You'll go through it with them anyway, so that's no problem. Cool. So how would you check your credit file?
You can get, a lot of banks have access to it, which will give you a credit score with Experian, or Equifax. But you can register for the full account. Now, I think it's about £15 a month, and they will alert you if there's any searches or strange activity on it. So someone else has done a credit search on your credit file, trying to apply for credit in your name. But that's a good one to do. You can just use the free version. There are so many different ones out there. You need to just make sure they are trustworthy. But Credit Karma is one that is free to use. Experian and Equifax, they are paid versions. Lenders, some search Experian, some search Equifax, some will search Experian and Equifax and TransUnion. Now, you might have a credit card that only registered with Experian or Equifax. So when a lender looks, they're either going to find it or not find it. More often than not, they will find it. So you could look at your credit file and go, oh, everything's great. And then I've got this personal loan with somebody that isn't registered. And then when the lender searches, they're going to find it, see that late payment and go decline.
Yeah.
It's a very complicated science. I think if they brought in the US version where you have your credit score assigned to you like a national insurance number, brilliant. Because with us, it's like having a metric and an imperial system. It's
right.
One, some use the other, some chop and change.
Yeah. Yeah. So Check My File or Equifax, they're quite good, strong ones, aren't they?
Check My File will look at them all.
Yeah.
But that's a paid one going forward again.
Yeah. You get a month free, don't you?
You do get your trial. You have to be careful about sort of supporting one more than the other. It could seem we are trying to kind of lead sort of clients into it online. It's have a look. You might have registered for a free trial one 2 years ago, so we're not eligible. You might think, actually, no, I need to do the credit building. They did talk about adding rental properties onto credit files a while ago. Now that to me needs to happen.
What, within a limited company or?
If you've rented for 5 years, paying £2,000 a month, and you're trying to get a mortgage that's £1,000 a month.
Oh, I'm with you. Got you.
Lender can then look, because what they start then asking us for is, right, we want 12 months bank statement showing rental payments. Some people pay weekly. Some people have an arrangement with a landlord where pay is this much, then that much. So that would be a nice thing for them to introduce.
If there is something wrong on this credit report, how do people get the wrong things removed from the credit report?
That's a good one. So you can dispute it. So you log into the credit file and you might see that you've got a missed payment last year when you actually made it on time. You can dispute it. And that will then follow a process behind the scenes where it'll be looked at, and it might be like the bank are like, yeah, we made an error, which does happen. Mistakes do happen. I touched on the voters roll. There's a lot of people are registered to vote at the home address where they live for 10 years, but it doesn't show on the credit file. We can just raise that and they'll go, oh yeah, you're right, update.
It's worthwhile going through. I've rang up Equifax to get some things or information on my report removed, and they did that within the week. So it's definitely worth doing, and it's completely free to do.
Absolutely. Is all these steps, really, this is what I will send the applicant inquiry home with to do. But if you are looking, even if it's next year or in 5 years or when you leave university to buy a house or to start your investment portfolio, this starts today. Have a look at your credit file, check it all, get rid of stuff that's on there that shouldn't be on there, close down old accounts, update everything, and then we're starting to look good for when we change.
Right, thanks for coming on today, Matt. If you have any questions or any topics that you want me and Matt to speak about, make sure to leave them in the comments below or message either of us on Instagram, to be fair. But yeah, thanks for coming on today, Matt, and we'll see you guys next time.